All right, welcome into the Crypto Bunker podcast. Today we're going to be talking about gold and gold miners. And I just want to kind of highlight this chart, which is um the Wheaton Precious Metals chart. And basically what we're looking at is some lines that I've drawn that show the similarities between what happened in 2011 and what's happening now. And this is a weekly time frame, so we can get a good look at it. And um, what really happened was it's the same chart essentially. Um, and so what we're looking at is you can see we have one, two, three, four, five rallies. One, two, three, four, five rallies. And all of them, most of them, not all of them, have this reversal indicator on them. Not this one, but we can see the four here. Not this one, but this one had this other indicator. So these are two different indicators. The one is the triangle, which shows a reversal, and then we have our actual reversal indicator. And so they don't always work, but in this situation, we also have to look at the moving averages, especially on the weekly time frame, and we can see that we're coming right up against this resistance and also this resistance, which goes all the way back to all of these rallies. They essentially all rallied out at $40. This time we tried to use 40 as support. We failed. And now we're coming up and testing this 40 here as resistance. And so we can see with the last 4 weeks, we've hit this 40 level and we have not been able to break free. So you see that this candle, which I'm going to delete, shows that resistance, and this candle shows the other resistance, and they're both right here at 40. And we also see the fact that we have the 150-week moving average, which is very strong, holding as resistance as well. We have a reversal indicator. We do have the 20-week and the 200 still moving up, and we have the 100 sort of starting to flatten out. And so I don't know if it's going to completely crash. I do think that there will be a pretty major sell-off where we could see it come down to the 20-week at the least. I think that this will happen most likely for silver and gold as well, but we can look at those charts. This is Wheaton Precious Metals. I think I mentioned that. We can see, though, the touch points here and how the touch points here as well sort of just continued. Like, this is kind of where I think we're at, like here. Although this was even more of a ripper than the one we're currently in. The one we're currently in sort of ending here. So I, reserve the right to, continue to see it somehow rally. But there's multiple factors which we can get into, which will, I will get into in terms of rates, the dollar, that also are going to give us some clues. But we can see this is a similar reversal, and then we did make, we crashed, made a lower low, made another lower low. And so I wouldn't be surprised to see something similar happen where we hit this. We can see we have this support here. So maybe we come in around 26 and we actually crash all the way down here. This is just like a double bottom almost scenario where it like makes a lower low, and that's the fake out, and that's actually where you buy on a crash. And so I do think we'll have a stock market crash, and that will lead to gold and gold miners crashing as well. Right now, it's kind of the perfect little time where I think the banks are long gold till the end of the year, and then they will probably dump that as soon as the new year starts, if not right now. I mean, they're creating a lot of buying pressure so that they can sell into that buying pressure. It's pretty obvious to me. We also have the monthly chart, which again, this just doesn't look good to me. What we're looking at is closing most likely below a very strong 20-month moving average that is moving down. So moving average that's moving down is always worse. We obviously had the reversals here on the monthly, which is good. We had two of them really. But you can see we're running into that resistance, similar to we ran the resistance here as well. You can see it's the same exact level. And to me, this is a doji, which again, this is kind of a dragonfly doji, which you don't want to see at the top of rallies. And I do think that that's a reversal candle. And so, again, we can look at a few more charts here. We can look at GDX, which is the gold mining index, which probably, if anyone is invested, is probably invested in that. And I would say this is kind of the get out of town rally, is what I'm calling it. It's a very obvious to me that, we have hit this resistance, and that we have a lot of heaviness in this chart, a lot of heaviness. It's coming down. You can see it trending down and down and down. And so again, what could we see? We could see something where we come all the way down here and we touch where this sort of support is down here at 15. This sounds extreme, I understand. But what we're looking at is very similar pattern to here on this chart. I know there's a lot of stuff, so just bear with me here. But what we can see is a reversal indicator. We can see we're running into the 150 week, and we then see a crash. And so, and it's also a trend line that's trending down, and we hit that trend line, and then we made a lower low, or we continued to sort of hit these trend lines on the way down. That's a very extreme example, and I don't think it would get that crazy. But again, I said, we could kind of just roll down to here. We've seen that be like the last resort resistance multiple times. And so we could see it again. Nothing is out of the question. And I think another thing I want to highlight is just the fact that, like, I don't really look at the news as much anymore. I don't have a Twitter. I just deactivated it. And I think, like, it's helped me to just look at the charts and be more unbiased and just kind of read the charts, because that's really what is happening. Nothing else really matters in this case. And so we can see we're running into the 100-week moving average coming down, the 150 coming down, and the 200 is above us as well. And so this is very heavy, a very heavy area here. And I actually wouldn't be surprised if we don't even hold the 20-week, because the 20-week is not as strong as some of these other weeks that are all above us. Okay, so we have 3 of these moving averages above us, so not good. Let's look at silver. Silver is also showing multiple reversal indicators. What I think will happen is we will come down to around the 200 week. When we cross the 20 week with the 200, we will probably come back and test this 20 to 21 region. I don't know if it will make a lower low, but silver is kind of unpredictable. I just don't see it. I think that this was the sort of generational bottom. I do think we could make a double bottom. Some people they would consider this a breakout, because we've broken out of the whole moving average lines. And now we could come back and test. And once you have a breakout, you would like to see a double bottom retest. And so in a liquidity crisis event, that is what we could see here. We're running up against this sort of longer term resistance that I've drawn here, that tries to hit all these lines. I again just don't see what I see here for silver, to be honest, and it's kind of contradictory to what I'm saying about the miners, but I'm seeing us kind of right in this region here with this reversal in 2009. And we, like I said, tested back, and that we cross bullish, and then we continue to test it. We tested it again. We tested it again. And so we tested it enough on the way up to then have this massive breakout spike. And so that is where I think we are. And I think it'd be a buying opportunity. None of this is financial advice at the $20 level for silver. I don't know about the miners. It's a little confusing. The charts are a little bit contradictory. We can look at this as, I don't know if this would be a breakout. I mean, I guess you could say maybe. We can look at it on a monthly and see if it gives us any more information. To me, it's just a heavy chart. It's very similar. It's not very similar, but it's just kind of similar to this, where we just kept trying to break out, and we just like couldn't, and then we just had to crash through. not even to the 200 week, but more to the 150, which I think is still in play. 14 region. Gold's a tougher one. Again, the metals are more to me bullish in terms of just maybe having physical metal than the miners at this moment. And it's hard because that's kind of one of the only ways you can own miners in a ETF, like in your retirement, things like that. Um, so yeah, I mean, I just would kind of be careful here. Um, and I would try to um avoid miners particularly. And I would also look for like a retest gold here um of the 1700 area for sure, the 200 week. And if we can hold that, it hasn't crossed bearish yet. The 20 week is very close. We're sort of getting resistance at these moving averages. It's interesting how all these moving averages are sort of similar. You almost can't even see them. Like the 150 week and the 100 week, I think are like, yeah, so that's our resistance. Unfortunately, I don't think that is going to work out. And then we'll test these, and if we don't go, we'll just make a lower low, and we'll probably hit this area around 14, like I said, in that 150 month moving average region. So um, let's go over the dollar. This is what I see for the dollar. We have broken this upward pattern. I do think we come back up and we test this 20-week moving average up here around 108, and we make a head and shoulders pattern where we have the head, we have the shoulder, and then we have another shoulder, and then we probably drop and make a lower low. But this rally will be the capitulation rally for stocks, and it will be a tell. So it will be a tell for the market to buy stocks, especially if we get resistance up here in this region. And I do think this is going to happen probably in January. It's what it's telling me in terms of the charts, either that or February, or both weeks or months. Sorry. And so yeah, I think that's where we're at with the dollar. And so that's kind of why I'm again like bearish short-term gold and silver. Because I think it's going to be a capitulation event where you would want to scoop some of that up afterwards. And so I think we get a dollar rally. I think we get a rates rally. We can see the 2-year, which is like the Fed rate. They tell us they're taking us to 5%. And so that is up here. And so what you could see is, again, we're testing this area here, and then we could rally up through here, only to see sort of a double topping scenario where we then crash completely down because they're going to have to cut rates. Obviously, we're in a recession. They're making a mistake, but they're continuing on with it. And, we caught support here, in my opinion, not only at this moving average, but the moving average really matches up as well with this support that we're seeing here. And so this is pretty good support region for rates, which again means that rates are going higher, usually means sell bonds, sell gold, buy dollars, sell stocks, pretty much sell everything except dollars in a high rate environment. So yeah, those are my thoughts. Hopefully you guys got something out of the video. If you did, please like and subscribe, and have a great rest of your day, and have a Merry Christmas. Goodbye.